Hello everyone, welcome to the channel. My name is André Cardoso. Thank you for being here. As always, it's a pleasure to share my work with you. I hope you enjoy. Happy New Year for everyone, and I wish you all a wonderful trading year, wealthy and disciplined. So, for today I want to start this journey for 2023, sharing a couple of charts with you, and I will try to create a habit on this process, and I will try to create some content for you here on YouTube during the next year. So pay attention or stay tuned to the channel and to the content that I share. I hope you enjoy it. So let's start with some of the commodities that I like to follow. And today I was checking some of them, and let's say I pushed it to my list a couple of them to share with you, just for you to pay attention to some of the levels that I think it may be at least interesting to pay attention to. So let's start with soybean. This is the futures chart on a 4 hours time frame chart. As you can see, we are now threatening these trend line support covering the previous lows. So we are in a let's say in a uptrend, let's say since October. So after the formation of this fractal at 1349. So basically, we are now threatening, or actually we are bouncing from a potential support trend line for soybean. So one of the patterns that I'm paying attention to, and it may take some time to form and to develop, and it will take into consideration this support at 1462, and we'll take into consideration the formation of the eventual right shoulder. So basically I'm paying attention to a potential, let me try to draw it, potential right shoulder to be formed. I want to see which fib levels will be needed to form that shoulder. So I believe something between the 38-50% Fibonacci level is a nice price level to form this neck. It will converge with the highs of the left shoulder. So basically I will pay attention to the head and shoulders formation. So if and there's a lot of ifs, because the market may take some time to form the right shoulder if you take into consideration the time since, well, all this time to form from the highs of the left shoulder to the head, so that it was almost a month, 21 days to form the between the highs, the head and the highs of the left shoulder. So take that into consideration. It may take some time to form that right shoulder. But if that happens, I will pay attention to this support zone, so to the 146, actually 1462, as I said before. So I will pay attention to this support level, because it may offer a nice opportunity to go to short the soybean. In terms of targets and projections for this pattern, I will assume that a fall below the support will trigger a short towards the 200% Fibonacci extension level, and this is projected at 1390. So wait for further developments. Of course, it may not form the right shoulder. It can fall without forming the right shoulder. So pay attention to a clear violation of this support level, which will imply at least taking into consideration the recent price action and this trend line support, that will imply the violation of this ascending momentum, which may trigger a deeper pullback. So eventually it will not form the right shoulder. But in terms of patterns, I always prefer to wait for the formation of a pattern instead of a simple breakout of a structure, because it may print as an outside return where you see the price falling below the trend line, threatening the 200 moving average, and then starting to recover. So that's one of the possibilities, and that's one of the reasons why I prefer to wait for something to form. And in this case, based on the price action, I will wait for the formation of these heads and shoulders formation. Now let's go into copper. I shared this chart on socials, specifically on Twitter. We were approaching this trend line, this eventual ascending channel and trend line resistance. We were trading at these highs when I shared these charts on Twitter, expecting at least the formation of the handle. So it takes a lot of time already, but I will assume that a clear violation of these highs, 3.95, that should trigger a move to the golden Fibonacci retracement level from this previous structure high. So basically a violation of 3.95 may trigger a move to 4.28. Of course that can fail, and it will spend more time inside its channel, so pay attention to that possibility too, but only a violation of these highs will trigger my bullish sense for copper. Talking about copper, let's go into crude oil. I have a bullish shark pattern projected at the bottom at 71.08, but I need to see a clear violation of the most recent support formed at 72.80, because we are also trading a range, and the midpoint of that range, there's the golden Fibonacci level. So basically there is a bullish shark pattern completed right there. I was expecting, and I still expect, a potential move to the upside and forming this bearish 5-0 sequence. I will not be surprised to see that, but in terms of risk-reward opportunity, I prefer to wait for the shark pattern if formed at the bottom at 71.08, which may offer me a nice risk-reward and friendly risk-reward opportunity to try to get involved. So basically I will adjust my Fibonacci retracement, the Fibonacci 50% Fibonacci level, so that there will be again the possibility to form another bearish 5-0 sequence after the formation of the shark pattern at the bottom. But this shark may offer me a better risk-reward opportunity than trying to go long from the golden Fibonacci, which I will not ignore. It still, one of the possibilities is a recovery from this price zone without a violation of the lows. But as I was saying, I prefer to wait for a retest of these lows, because that will offer me a better and friendly opportunity in terms of risk reward to try to go long with crude oil. Natural gas, I have another, this is a higher time frame event, this is kind of a daily, and you can see a fall of these lows, triggering a deeper pullback for natural gas, or a deeper fall, let's say. We have a crab pattern projected. Actually, I have this pattern projected, I'm not sure, weeks from now, but and nothing assures me the pattern will complete, but I have this bullish crab pattern projected at 2.89, so I do expect some pressure at this price zone. Note that we are also approaching the previous, let's say the previous consolidation box zone. that completion point for the shark, for the crab pattern, points almost to the midpoint of this range. So which is not unusual to see a price breaking above a specific range and then at some point retesting this range again, specifically the midpoint of this range. Well, we have this, just to say that we have this crab pattern for natural gas at 2.89 or 2.90. This pattern also, let me also delete just a couple of things here. We have default targets for that pattern as usual, and those are projected above 4.74. Basically, the formation of this pattern will suggest a retest of this support level. As you can see, it nails the 38% Fibonacci retracement, will nail the previous structure support at 4.74. So I will not be surprised to see the formation of this bullish crab pattern and then a retest of the previous lows. Now, simple, basic trading. First of all, you can see the heads and shoulders right there above. Just a clear sight. But you can see also these three waves structure. So you can also use an extension and try to identify those default extension levels at the bottom. Let's delete the 113% Fibonacci extension. Let's keep the default ratios right there, 127, 141, 150%, and so on, 161 at the bottom. This is not a fib that I'm paying attention at this point. So at this moment, 161.8 extension of the last swing high projected at the bottom, or projected below the support, 2.90 bullish crab pattern on hold. That will force the price to complete also the basic technical A, B, C, D pattern. Okay. And of course, after this swing, I will expect a retracement. This is the target for the crab pattern. Okay, this is not a target zone for this ABCD pattern. If you want a default target for that pattern, you need to use a retracement from the highs to the completion point, and let's assume something like the crab pattern completed a few points above the 127, a bounce, and then you have the 38% Fibonacci retracement at 5.62. So if you want to trade the higher degree ABCD pattern, probably you will target the 38% Fibonacci retracement. Let's see if we have some convergence between the very first level of the Fibonacci levels, the 23% Fibonacci, in convergence with the minor Fibonacci level right there. So we have kind of a cluster box between the first level of Fibonacci right there, the default target for the crab pattern, and the previous structure support. So basically this will be my first target zone. This is where I will start to partitioning my trade, to break even my position, if the market allows me to do that, if offers me that opportunity. So that being said, pay attention to natural gas, 2.90. Now cotton, just because we have a small structure right here, which it's very clear for everyone, not for a specific direction, just wait for the breakout of this structure, because it may trigger more momentum, or to the downside, or eventually to the upside. To the upside, I will target the daily moving average. At some point the market will cross these levels or will visit that 200 moving average. You can also try to find some convergence once the price starts to approach this 200 moving average. Try to find some convergence with this Fibonacci level at 102.98. In terms of advanced pattern formations, I'm pointing to a new lower low projected at the golden Fibonacci extension of the last swing high, which points to, let's put the price here, 57.78. So basically this is the eventual crab pattern, far away from the completion point, but I need to see a clear violation of these lows. Again, the breakout below this trend line support, I believe it may trigger a retest, at least a retest of the lows, and then I will point, if there's a breakout of the support, I will point to the formation of this eventual crab pattern at the lows. For the upside, as I said, a violation of these resistance levels may trigger a momentum to the upside. I will point to a visit to this 200 moving average and look at this huge gap above on cotton unfilled. I will not be surprised to see a move to the upside also later, and if that starts to happen, there's also patterns projected at the highs, specifically the shark pattern, false breakout below, and then a bounce towards the highs. Of course, there's a lot of things that may trigger other trades, let's say, or other opportunities to get involved. Specifically, a clear violation of this size of this fractal should trigger a retest of this previous structural resistance. But of course, if you are far away from the completion of this bullish crab pattern projected at the bottom, we are very far away, even far from the completion of this pattern. It's important to take this in consideration because this bearish shark pattern that I projected now depends on the false breakout of this low, a false breakout of this support. Okay, we have a new lower low. We need to see the price keep trading lower. If the price starts to recover, we will start to consider a potential false breakout below the support, and that will be confirmed with a breakout above this resistance. So that should trigger a trade momentum to the upside. That should fill this gap above, and also, of course, as always, and that will happen on a lower time frame, whatever the time frame you like to use. These variables are there on those time frames. 1 minute time frame, you can see a false breakout of a specific structure. On a lower time frame, 1 minute, 5 minutes, and you'll see the price, once confirmed, searching for the golden Fibonacci. And if that happens, that will complete the shark pattern at the highs. Of course, this is a daily time frame. It will take weeks, if not months, to complete or at least to confirm some of those variables. So it's too soon to start to project those patterns. For now, we are paying attention to the eventual breakout of the resistance and the most recent support levels, which should trigger momentum to the upside or to the downside. So, and this is cotton. One of my favorites, coffee. It did failed it failed me some patterns that I had projected before, right below this support level. I was expecting a bounce after that. It did not happen, so the market keeps trading lower, and we are now moving sideways inside this kind of a bearish flag pattern, if I may say. So we have technical double bottom. We have a neck, 174.35, threatened already multiple times and rejected. So I will assume that a clear violation of the support will trigger more downside momentum for coffee. Unless I see a clear violation of the next zone, I will start to add positions to the upside on coffee, and I will try to drive it. But we have the crab pattern projected and completed at 164.8. Very nice price zone to complete the crab pattern at the golden Fibonacci level. But rather than that, there's nothing more to add to this chart. So we have a bullish crab pattern. That pattern usually targets the 38% Fibonacci level, 188.05. That's a default target for the crab. That pattern still alive, let's say. That's still possible to try to take advantage of this pattern, but this rejection of this fractal resistance, the next zone, the 174.35, these clear rejections may suggest more downside momentum if there's a breakout of this support level, and there is no breakout yet. So wait for the breakout if you want to add your shorts for coffee. But even though we need to wait for a clear violation of this fractal, one for the downside or 174.35 to the upside. Now, Nasdaq. Let me go into a lower time frame. Let me go into a 12 hours time frame chart. And I posted these chart before on Twitter, also on socials, and I also shared these with the communities I work with, calling people attention to this golden Fibonacci level, because usually this is where the price may find support after a double bottom. So we have a double bottom, we have a breakout of the next zone, confirming the pattern. So we expect that pattern to act as a potential reversal behavior. There's a couple of resistance above the next zone, and then the price starts to fall to the golden Fibonacci level. In this process, or this sequence, completes the bullish 2618 setup. I'm sorry, I was saying 5-0 sequence, not true. This completes the sequence, the 2618, which is nothing more than a double bottom followed by the pullback to the golden Fibonacci level. That's the reason behind the 2618. Okay, basically we have the double bottom confirmed with a clear violation of the next zone. At some point the market will form resistance and starts to search for the golden fib. So in this is the moment I saw the price approaching the golden Fibonacci, and I started to call people attention, because we are now let's say threatening the golden Fibonacci or trading the golden Fibonacci level. It may offer a bounce from this price zone. We can see that you can see that the 2618 setup depends on the double bottom. Okay, so basically it's still open, the possibility for a bounce for the Nasdaq without breaking these previous lows. But at this moment the price does not suggest that to happen. So the market has failed to find support at the golden fib. Actually, it has failed to find support at another extension level, a minor golden Fibonacci extension also projected there, failed to find support there. It's true that we're still trading above the previous lows, which opens the door for a bounce or for the eventual bounce. But at this point, I'm not so convinced. And the reason why I'm saying that? It's because we can also see this as a potential cup and handle formation, and this is a very shy bounce to form that handle, but that's one of the possibilities. I will assume that a clear violation of the lows may trigger a deeper retracement or a deeper pullback for the Nasdaq, or a deeper drop. Let me project this fall below the support, and that points to 90.84, so basically 90.91. So I'm not saying it will happen, but this is just the default projection for this inverted cup and handle formation. So if this is the handle, be prepared, because it may trigger, well, if not, well, let's point to 93.20, and that's what it is. The failure to find supports above these lows, of course, that may trigger more downside for the Nasdaq. Now let's go to the SPX 500, and let me go also to a 4 hours time frame, because it will be clear. And I don't want to talk about this trend line resistance, because we are tired of this channel. So we have this trend line. I need to draw it again. We can't avoid it. Actually, it's there. I have it on a higher time frame, on a 12 hours time frame, on a daily. You have this trend line resistance from this descending channel. We saw last week's or a few weeks ago the market threatening multiple times the violation of this structure. Everyone starts to think, okay, probably this is the momentum or the moment to break out above. Some of the people I work with, we start to call people attention for exactly the opposite, because we have a couple of patterns projected there suggesting that pullback, and all the sentiment, all the extreme sentiment of bulls may fail at some point, and that was one of the moments where we start to call for the short side on equities specifically. So we have a couple of patterns projected there. As we can see, we have this higher degree bearish shark pattern that I projected at 4K exactly. There's one first initial reaction, not enough to fill the expectations of the pattern, of course, but then the market starts to print this kind of a megaphone formation, and when the breakout of this structure triggering these small momentum to the downside. But we have a couple of patterns projected there. We have the trend line resistance. Well, that belongs to the past already. So let's get focused on what may happen now. After this recent drop, I see this as a potential first reaction, consolidation. I want more bearish momentum for equities, for SPX 500. I have a pattern projected. I projected this one yesterday, I believe. I identified the possibility to form this scrap pattern at 37.19. So this is the golden Fibonacci of the last swing high projected below. So this is a lower or a minor bullish scrap pattern projected right below the golden Fibonacci retracement. So let's see how the price will react at this price zone. So bearish flag pattern calling for more downside, and it's now I see the SPX 500 now breaking this structure to the downside. The German DAX I posted before, we have this we have this bearish crab pattern that I shared among the communities on Twitter and the people I work with at 14,670. So this was the bearish crab pattern. I projected this pattern after the breakout of these highs, after the breakout of this structure, because I started to project multiple Fibonacci levels above, specifically the 161 and the 113% Fibonacci extension, one immediately above the resistance and the other one at the previous structure highs. And I call people attention to the eventual formation of this bearish crab pattern. As you can see, you have a fractal at 14,677, $7 above the golden Fibonacci extension, and the market starts to drop. A retest of the highs, we have the most recent resistance printed immediately below a bearish bat pattern completion point. You can go into a lower time frame to see that W-shape pattern, as some of you are familiar with. That pattern completes at a 88.6% Fibonacci retracement level. Nothing assures me the market will complete that pattern. Actually, the market has found resistance immediately below, as I said, but nothing assures me a new high, just a new higher high will come just to fill that pattern. As I said multiple times, if you want to try the short side of these of the DAX, specifically with this bearish bat pattern, we always need to take into consideration the 113% Fibonacci extension, a few points above the starting point of the pattern, because it may also complete the bearish alternate bat pattern, okay, projected at 14,800. And then if the price fails to find resistance in this price range or between this price range, then I will assume the price will rally to the upside, and then I will pay attention to the golden Fibonacci above. For now, I'm paying attention to the eventual formation of this bearish bat pattern on the German DAX. Let's go to gold. Let's cover gold on a daily time frame. I shared this chart before. This was one of my last positions to the upside on gold. I shared this also on Twitter, saying the violation of this resistance 1729 may trigger a momentum to the upside. So we have the 200% Fibonacci extension as a default target for this technical double bottom. Target achieved 1831, and also a bearish alternate bat pattern completed at 113% Fibonacci extension level, 1833. So I will assume the market needs to pull back a little bit, and let's say 1769. So this is the target zone for this bearish alt bat pattern on gold. As I said before, well, I need to see the price starting to fall into these Fibonacci levels, but on the other hand, if the price finds support at this price zone, let's say we have this previous fractal right there. If the price finds support right here, so the previous structure resistance, if the previous structure resistance acts as a support, and if the price starts to bounce from this price zone again, I will not ignore the potential move to the upside, and eventually I will pay attention for the next Fibonacci level, the golden Fibonacci at 1927. For now, I'm focused on the downside on gold towards the 38% Fibonacci retracement level at least, and that may converge with this 200 daily moving average, which now points to 1779. Okay, so there is also the previous structure in daily fractal support at 1773, So there's a couple of elements there. The 38, the previous structure support, the 200 moving average. So that converges with the default target for this bearish alt bat pattern on gold. Pay attention because that's not granted. There's also a possibility for also actually I have my long-term bias, if I need one, on gold is bullish. I still believe that there will be a retest of these highs without breaking the recent monthly and weekly fractal supports printed below. So I still believe there's a chance for that, but it's a step-by-step process. And as you can see, there's data released today holding gold in this previous resistance level. Pay attention to that reaction. We have actually there was seconds ago there was data release shaking the markets at this point. Let me just check other stuff. Yeah, there's data, and as you can see, there was a clear bounce. Even on a daily, there was a clear bounce on gold and this previous structure resistance. So stay tuned in this price zone on gold, because it's an important price zone. Now let that guide us into the Dixie. I shared this bearish crab pattern before on the socials before the completion point. This is a weekly time frame, so I shared these once we start to approach this Fibonacci level, saying okay, there's a potential crab pattern that may force a pullback on the Dixie after this rally to the upside. So if you go into a daily, there's the completion point of that pattern, and now if you keep decreasing your time frame, we saw the dollar index finding support very, very close to the 113% Fibonacci extension and the completion point of this bullish alt bat pattern. So I will assume that since we recover above this daily resistance, so actually we break above this daily fractal resistance, I will assume there's a lot of room for the Dixie to trade to the upside. 107.69, it's the default target zone or the default Fibonacci level for this pattern. So I will not be surprised to see a move on the Dixie to the upside. Note that we are also facing a very, this is a kind of a 15 minutes 161.8% Fibonacci extension. In fact, there is a crab pattern right there, so this may produce a minor retracement even on a lower time frame. As you can see, there's patterns emerging, so I will not ignore not the 50%, but at least a 38% Fibonacci retracement on the Dixie on an intraday momentum, at least a retest of this daily fractal 104.93, and then eventually more momentum to the upside. But as I said, since the formation of this bullish alt pattern, I will not be surprised to see the Dixie starting to recover from this price zone without breaking the recent lows towards the 38% Fibonacci retracement level. That will not happen in a single candle, you know, but it may take some time to achieve those levels. It's a progressive move. But let's see that there's also that possibility. The same way there's shorts for euro versus dollar, of course, I believe the Dixie may offer momentum to the upside. Now there's another 5 instruments or 5 pairs that I want to share with you. One of them is the pound versus the Australian dollar, the Forex. Let's jump into the Forex. We have this bullish shark pattern completed at 224% Fibonacci extension. The data released last week forcing the price to penetrate these levels and to almost kind of to invalidate the sequence. Of course, this was not tradable because it happens immediately above data release. So there's only one option to trade this pattern, is with an order, a pending order, an order to buy, a standby. You know, you put an order and you wait for the price to tick and to trigger the pattern. But even though you need to protect during those moments, you need to protect. You need to use extended stops, which make no sense to when you trade harmonic patterns. It makes no sense to use so extended stops. So basically, it was not tradable at this point because it converges with these momentum and these very sharp and aggressive moves related to some data released at the same time. So it makes no sense to trade on those environments unless, as I said, you have a pending order positioned already. You have already your study done. You put a pending order there. If triggers, it's done. If not, move forward. But what we have now, it's a potential bounce from the golden Fibonacci level. I'm trying to follow these the last 3-4 days, and I saw the price finding support at this golden Fibonacci level. So I will admit that a breakout above this resistance will trigger momentum to the upside, and based on the Fibonacci ratios that we have here, I can also project a crab pattern at not the crab pattern, I'm sorry, the alt bat pattern at the 113% Fibonacci extension. The reason why I'm not searching for the 88.6% Fibonacci retracement, it's because we are not trading at the highs. If we were trading above, okay, I can search for a bearish bat pattern printed at the highs. I don't want to search for the bat pattern. Let me try to pick this again, but I don't want to search for the bat pattern at the bottom. Okay, I want to search for an extended pattern, and that eliminates the 88.6 because we are trading a potential move to the upside. I will not expect the 88.6% Fibonacci retracement of this move, which is insignificant. That's no relevant to the markets and to the institutionals. That's not a Fibonacci level. That's not important, you know. So I prefer to wait for an extension, and this extension is a different case because it will force the big institutions to hunt all those stops positioned above for those who are trying to short below this fractal. If you try to short this bearish pattern, most of the times the marketeers will push the market to above the previous fractal and your stops, and then the price starts to fall. So for that reason, I don't search for the bat pattern specifically at the bottom of a structure. I can search for an extended behavior, and that guides me into an extended bearish alternate bat pattern, or even the crab pattern extended to the golden Fibonacci level. You can see also the 224% Fibonacci extension nailing the previous structure highs, which is interesting. Not relevant in terms of harmonic trading or harmonic patterns, but that's interesting to see the 224 nailing those previous highs. But for now, a bounce from this golden Fibonacci will not be a surprise, and as I said before, a violation of this resistance may trigger a momentum to the upside, and then I will search for that convergence between the 200 moving average, the 50% Fibonacci retracement, and the 113% Fibonacci extension level of the last swing low. So this is all an extension level. Those are all extension levels of this last swing low projected above, of course. So that being said, pay attention to momentum to the upside. The breakout of this resistance, of course, this fractal, that should imply, or that could imply, the violation of this descending parallel channel that you see draw here. So that may converge with this breakout. So pay attention to this momentum on the pound versus the Aussie. Now dollar versus the yen. Let me go into a higher time frame. Let me keep this. Let me keep my mental health intact and keep these higher time frames. Now, dollar versus the yen. We call it for shorts after a retest of this structure support. I was sharing some content with other communities I work with, and I shared some charts when the dollar versus the yen were trading at this previous structure support level. So previous structure support turned into resistance right here. I wasn't expecting a deeper. Let's say I wasn't expecting this magnitude of a move. But based on what we have at this point, and assuming that since we are now threatening the daily fractal resistance, I will assume that a breakout above the fractal may help the formation of patterns above. So the first one that I will pay attention, a retest of the previous structure highs, 137.60, the golden Fibonacci level, few points above. That will force the price to position a few points above the 200 moving average, approaching from above, which now points to 135.59. So, but this is the first price zone that I will pay attention to on dollar versus the yen for the short side, and this pattern may offer a retracement back to the current price zone. Okay. So if you are expecting to go long from this after the breakout of the resistance, be careful, because the formation of that pattern may force another pullback to the current price zone. So you think you are trading the breakout of the resistance, and suddenly later you are back to this price zone again. So the good thing about that is that if the shark pattern completes above, and if the price starts to fall again, and if the price achieves the default target, all this sequence, let me change the color here, all this sequence will be will complete, let's say, will form another pattern, which is the bullish 5-0 sequence, and at that point we will expect the price to bounce from the 50% Fibonacci retracement level, and then eventually more momentum to the upside. But a bounce that doesn't mean more momentum in terms of trend momentum, but it means the market may retest the previous structure highs or previous structure support level. That will depend what structure the price will form here. But just to say that a clear breakout of this resistance may trigger a move to the upside, but there's also a crab pattern or a shark pattern projected at 137.60, which may then later be followed by the 5-0 sequence as always. Okay, the bearish shark pattern at target zone will always complete the bearish, or in this case the bullish 5-0 sequence at the 50% Fibonacci retracement level. Dollar versus NOK. We are approaching a bearish shark pattern at the golden Fibonacci level 10.32. That pattern will converge with the 50% Fibonacci retracement level projected a few points above, and that's what we have for the Norwegian krone. Nothing invalidates, let's say, the possibility for more upside momentum, but let's say at some point it needs to pull back. And with this bearish shark pattern projected there, I will not ignore that possibility. The formation of the pattern, the golden Fibonacci acting as a resistance, as an element of resistance, the pullback back to the 38-50% Fibonacci retracement, and again always the same bullish 5-0 sequence at actually it's projected at 10.0, so that's the bullish 5-0 sequence if achieved. For now we are a couple of points below the completion point of a bearish shark pattern at 10.32, as I said, so pay attention to this possibility of a shark pattern for the bears. The failure to find resistance in this range, or let's say near this range, and we will pay attention to a potential extension, a direct extension to the 224. Note that it's possible to see the market reacting on both of these levels. Bearish shark pattern at 161, a retracement 38-50%, and then the price starting to move to the upside again, and eventually the 224 will offer again another pressure. It will be another pressure element later. That will depend the time the market will spend, or how much time the market will need to achieve those levels. If that happens, if there is a pullback from the golden fib and then the pullback and then the bounce to new highs, that will depend how much time the market will need to achieve those levels. Because if there's a clear move, you know, if there's kind of an ascending channel or a parallel structure or an ascending wedge, whatever the price will print us during this process will impact how this let's say it may impact the pressure this Fibonacci level may exert on price. So let's wait. What I mean, I'm trying to get my idea clear. What I mean is that if the price spends too much time here, I will not pay attention to this Fibonacci anymore. But if the price, let's say, prints a small correction, a 3 waves to the downside, and then starts to bounce in a direct move to the upside, I will take this kind of a move in consideration, and the 224 may act as also as another element of resistance later. You know, that will depend how much time the price will need to achieve those levels. As I was saying, sometimes it's hard for me to explain my ideas. So Norwegian krone 10.32 bearish shark pattern on hold. The Kiwi, as I was saying, when sharing the chart on gold, we saw that reaction on news, and the same happens on the Kiwi. We were threatening the previous structural lows, and we saw, actually we are seeing a nice reaction without after threatening the lows. So I draw this descending channel, this parallel channel for the Kiwi. We had the breakout of this ascending one. The previous one formed from these lows from October. Nice reaction, nice recovery for the Kiwi. But it has found resistance at the previous structure high. So basically we have already a weekly and daily fractal resistance at 65.13, and we have the 38% Fibonacci retracement at 61.30, but we have also, and that's the pattern that I'm paying attention to, we have also a symmetrical we have a symmetrical pattern projected a few points below at 60.95, 60.94. So this is just a couple of points below the 38% Fibonacci retracement level. So I will wait to see how the Kiwi will react to these levels. Of course, at this point we will be trading an extension of the first swing low. You can plot those extensions between, let's say, between the 127, 141. You can also use the other Fibonacci's there, 150, 161. So this all those variables, actually the pattern can extend to 224 to 41, but all those variables will be considered as potential completion points for the ABCD pattern. I'm focused on the symmetry of the move, so I'm focused on a symmetrical projection, and that being said, I will point to these lows at 60.95, 60.90. That's my not my target, but that's my price zone where I will start to pay attention for the Kiwi. Of course, a violation of this previous structural resistance, and I will need to readjust my thoughts and my ideas. But for now, I'm paying attention to the possibility of the formation of this ABCD pattern at 60.94. So that's for the Kiwi. And euro versus dollar, as I was saying, if you have shorts for the dollar, probably you have longs for the CHF and the Dixie. The Dixie, as I was saying, was threatening the resistance. We have this reaction, at least for now, we have this reaction on euro versus dollar. So this is a 4 hours time frame. We are threatening the 200 moving average. We have also a support at 105.19. So, and for the upside, I need to see a clear violation of the resistance, 0638. So a clear move above this fractal resistance may trigger at least retests of the previous structure highs, if not a new higher high, but at least a retest of the highs. But as I said before, we have also this bearish crab pattern completed at 106.10, and that pattern should target 102.79, 102.80. So this is my default target for the pattern. I'm still holding my positions on these shorts. Nothing attention, because nothing is granted, obviously. And when I say I'm holding my shorts, I'm holding a small position size for this one. But I'm not saying you should do the same or not. You should decide what to do. I'm not here to tell you what to do. I'm just suggesting based on the specific pattern and a specific price behavior. I never know the outcome of the patterns. I know there's a specific probability for them to work, but we trade in sequences, and there will be sequences where those patterns work for you, and there will be sequences where some of them will not work. Let's put things like this. And if you don't have control of your risk, of the position size, of the time frame you trade, and the position size you need to use to readjust your percentage of risk, it doesn't matter if the pattern fails, or if there's a higher probability or not behind the pattern, because probably you will fail, even though if you don't have a risk strategy to trade the patterns. And as I said multiple times, it doesn't matter the methodology you use to trade, but you need to create a strategy to trade that methodology that you choose. So if you don't have one, it doesn't matter the methodology that you trade, you will fail sooner or later, unless you trade. Actually, you will be trading as a gambler, almost as a gambler, and you'll be, if you are successful, it's because you have a tremendous luck in your gamble life. So apply a strategy, apply a risk strategy to trade. Don't fear the patterns. If the pattern is there, don't start to think, but where's the sentiment? What are people doing? It's really happening. It's really there. Of course, it's there. If you study the pattern, you know the pattern is there. You just need to embrace the pattern, apply a strategy to trade him, to trade them, and don't fear the pattern. If you know the historical, if you have made your back test, and if you know that historically there is a probability for those patterns to work, and I'm saying these ones, the harmonic patterns or any other, if there's a probability for the price to break in a specific direction, use that edge in your favor, but with a friendly risk-reward approach, with a friendly risk-reward strategy, something that allows you to be here the next day, even with the most, even with the worst trading days, you will be capable to be here in the next one. Okay, so that's my 2 cents on that. So I have shorts on the euro versus dollar. Not saying you should do the same, but that's my point of view. That's my suggestion. I'm trying to take advantage of this bearish crap pattern completed at 106, and also the breakout below this triangle, below this fractal resistance already as a weekly fractal. So let's see how the market develop. Don't rush, because there's also possibility for momentum to the upside before more downside. So let's see how the market reacts to these 200 moving average. So if you are thinking to short the market, as soon as you see this video, probably the market is already trading at higher prices, or not at least it will not be at the same price zone for sure when you see this video. But so just caution, it's very important. So don't try to rush. We still be here tomorrow for sure. That completes my week 1 2023 journey. So let's wait for the next one. I hope you enjoy. Have a nice weekend, everyone. Take a rest, and we will be here next week with more content and more videos. That being said, stay well, and see you the next time.